Welcome to Digital Asset News. Take the top stories in cryptocurrency and digital assets and break them down into bite-sized pieces. Today we got some interesting stories. First up, Grayscale buys 33% of all Bitcoin mined in the last 3 months. And what this is saying to me is that there are a bunch of institutional investors and they are dominating. Also, Jack Dorsey's Square's Cash App launches automatic Bitcoin purchases, and for me, this is a godsend for someone who does dollar cost averaging. So if you want to know about that, stick around as we review this really good story. And also, we need to revisit a theme, which is the Ethereum 2.0, which is going to happen in hopefully a couple of months. And we're going to talk about Ethereum 2.0 staking because there's a lot of different questions that I receive. So I wanted to go over this new article plus a more detailed article from Consensus. So we'll go over all that today. Plus, at the very end, we're going to go over Scam of the Day. We'll do that at the very end. So let's just break into today's stories. First up, looking at CoinGecko, let's take a look at the market. What do we got? So Bitcoin making a little surge, $9,700 price. That's pretty nice. Almost going to top out at 10K. Let's see if we can reach that again. Ethereum is bouncing up, 212. I remember when it was, bouncing around 192, 193, but here we are. XRP, about the same, 20 cents. Bitcoin Cash, SV, Litecoin, everything's pretty much the same, except for Tezos. Tezos looks like it's got a little bump to it, 282, but this is the 7-day average. One thing I like about CoinGecko is that it pretty much lays everything out for you. It's got the 1 hour, 24 hour, and 7-day changes, as well as the volume and market cap. I like this one a lot better, and plus it's not owned by Binance, so I'll just take this one. Anyhow, let's move into today's stories. So first up, institutional dominance. Grayscale buys a third of all the Bitcoin mined in the last 3 months. That's amazing. That's a lot of Bitcoin to buy. So the investment fund added 60,762 Bitcoin to its Bitcoin Trust Fund between February 7th and May 17th. That's equivalent of 607 Bitcoin acquired by Grayscale each day during the 100-day period. Each day, 607 Bitcoin, like it's nothing. About 34% of Bitcoin added during the 3-month period were bought in just 17 days amid a checkered spike in the price of Bitcoin. This makes me wonder, when I see this type of information, I'm thinking to myself, well, that's the whole reason for all these spikes for the Bitcoin halving and everything else. I thought it was just, a lot of excitement about the whole thing, and there's just retail investors that are just slowly getting in like 2017. Apparently I was wrong. Again, it's just a big, huge hedge fund snapping up all the Bitcoin and selling it at a premium for their fund. So pretty interesting, and we'll see how that plays out. But I can tell you one thing. Grayscale is super bullish, and I can see why they are doing all these things. They're making big moves, and I have to tip my hat to them. Anyhow, Grayscale operates 10 cryptocurrency investment products focused on institutional investors. It currently has more than, check this out, 3.7 billion worth of digital assets under management. 3.7. Used to have 2.2 just a couple months ago. Now 3.7. Funds cover Ethereum, Bitcoin Cash, Zcash, XRP, and more, but make no mistake about it, Bitcoin is far and away the big fund itself. And it states here the digital asset manager allows institutional investors to gain exposure to assets such as Bitcoin or Ethereum, but without actually owning any coins. So the investors that come in, these institutional guys, they say, or the hedge fund managers, they go, hey, we want to get into cryptocurrency. No problem, Pete. I'm going to help you out, and I'll do all the hard work. Just pay us some money. Sounds good. It sounds very nice, like a very nice type of thing that they would do for their friends, but they're not nice. Well, I mean, maybe they're nice. They're probably nice guys, but they're doing it at an incredible premium. This was an article from April 10th, one we had talked about previously, but the Ethereum Trust is trading at 515% premium, and I believe the Bitcoin Trust is like a 3x premium. So it states here it costs $90.55 to buy a share in Greyscale Investments Ethereum Trust. However, its Ether holdings per share are currently worth just $16.10. That means it's 5 times more expensive to buy Ether via the trust than on the open market. So why would anybody do this? Why would institutional investors go, yeah, I'm going to pay 5x or 4x or 3x or whatever it is? It's because there's 2 reasons. One, they don't want to deal with the hassles and the headaches of custodianship, and they don't want to, deal with private keys and public keys and nano ledgers and all that stuff. They're just like, you know what, we just want to buy it. And it's only 3x more? No big deal. Because we know it's going to skyrocket in price, so we don't care to pay the premium. That's how I see it. Let me know what you think in the comment section. So back to the article, it says Grayscale's aggressive crypto purchases have recently been spotlighted around Ethereum as well. At the end of April, it had bought about 50% of all newly mined Ethereum since the beginning of the year. It now holds the equivalent of 1% of all Ethereum in circulation. And that, my friends, is a huge amount. And when we took a look at their Q1 report, this was just released in, when was this? Q1 2020, so around March, beginning of April. And they had total assets under management of $2.2 billion. I've talked about this many times on the channel, but it's worth noting. It's worth noting again and again because I don't know who is new to the channel and who's been around for a long time. So just so if you're new, this is important information to know. You've got digital asset investments from Grayscale. And the majority of their investment, 88%, came not from people like you and me, not Joe Schmo or Jane whatever. It comes from institutional investors, dominated by hedge funds. And that was in the first quarter of 2020. Now, if we look back 12 months, trailing 12 months, it was a mere 79% came from institutional investors, dominated by hedge funds. So I'm always fascinated to see what the quote-unquote smart money is doing, people who have made this their profession and they have actually take considerable time to learn about the market. When I see this many people coming into this area, I tend to believe that I made the right decision. So let me know what you think in the comment section. Did we make the right decisions to get here? I think we did. Tell me I'm wrong. Let's move on to the next story. So next up, this is big for me because I dollar cost average. I know a lot of you like to trade. Yeah, I mean, some day trade and you're gamblers, great for you. Some swing trade, that's not so bad. And some of you leverage trade. And I think leverage trading, I'll just tell you, I just think it's just hugely gambling. Like I said, I lived in Vegas for a long time. And I can tell you, I can spot a gambler from a mile away. And I don't know what you're doing, how you're doing if you're not getting wrecked, but I just don't believe in leverage trading. Anyhow, dollar cost average, probably because I'm pretty boring and I just like to just slowly accumulate. Anyhow, Square's Cash App launches automatic Bitcoin purchases, and I think this is great. So this is from Jack Dorsey. He is the creator of Cash App, also of Twitter, also created Twitter, so pretty busy guy. He states you can now do automatic recurring purchases of Bitcoin in Cash App daily, weekly, or every 2 weeks, and change the display to Satoshis. And I thought this was, I mean, first of all, Coinbase already does this. It allows you to set up recurring purchases, which I have it set up for every week. And I continuously buy my 7, which are Bitcoin, Ethereum, XRP, Chainlink, Cardano, EOS, and now Tezos. So I can't buy Cardano. I actually buy that through eToro because it's not offered on Coinbase, probably because they don't have a functioning mainnet yet. Hopefully Charles Hoskinson can get that going. Just a little request. And also, I don't put any more into XRP. I've maxed out my position there. But every single week, I put money, just a little bit of money, between $25 and $100 into all 7 of my different assets. And it just helps me deal with the volatility of the markets right now. So I think now if I have another option to go through Cash App and buy Bitcoin, maybe I'll do that as well, depending on the fees. But I think one thing that when I first saw this, I thought it was a brilliant move, which was to see, instead of just seeing Bitcoin, now you can see it in Satoshi. So instead of you looking at and going, and remember, as this year progresses, and we see next year and then a year after that, you're going to start to see a flood of more people coming into cryptocurrency digital asset space. It's just going to happen. So when they look at Bitcoin, they're like, I don't want to own 0.0002 of Bitcoin. I want to own a full Bitcoin. How much is that? Oh, 10,000? I don't have that. But I'll buy some other kind of altcoin or whatever else. But if you can change it over to Satoshis and go, wow, I can get 100,000 Satoshis for $10 or whatever it is. Yeah, that sounds pretty good. It's just a psychology switch. I own a couple of businesses. One is an online education program for nurses. The other one is my Amazon business. We also do a charity for kids. And I can just tell you, as far as marketing goes, this is a brilliant move. Just to change the psyche of what is going on with the buyer, to go from 0.0002, which no one wants, to 100,000, 200,000, 500,000 Satoshis. That just sounds more appeasing. So I thought it was a great move on Jack. And another thing is that I was thinking, I'm like, why is, first of all, we know Jack Dorsey is really big into Bitcoin. He's talked about this many times, but the thing is why are they going so heavy now? What's going on? And then I remember an article I read is that Bitcoin drove half of Square's Cash App revenue in the fourth quarter. So now can you imagine, and this is just people who just would randomly go there and like, I'm gonna buy Bitcoin today, and then they go away. And then maybe like a month later, I should buy more Bitcoin because it's down. Now they have a recurring purchase where it's going to be automatic. It's like boom, ba-boom, ba-boom, ba-boom. You can do it every day, every week, every 2 weeks, whatever it is. So this was an article, February 27, 2020. And it states that Bitcoin revenue was 178 million for the Cash App between October 1st and December 31st. 178 million. Non-Bitcoin revenue on the Cash App in the fourth quarter was 183 million. So roughly half. So now I see why. And I don't know, first of all, why didn't they do this before? Because people are essentially lazy and they're not going to, keep going back and forth. So if you just have this on a recurring purchase, it just makes it like brain dead simple. Set it and forget it and you're done. Beautiful move. I think it's going to actually push the price up because people are going to keep buying and buying and buying in small increments. So good for Cash App. So the question I had was about fees. Well, what kind of fees are we looking at? So the only thing I could find as far as fees here, it states Cash App may charge fees when you buy or sell Bitcoin. These fees will be listed on the trade confirmation before you complete a transaction. Okay. Cash App charges two kinds of fees, a service fee for each transaction, and depending on market activity, an additional fee determined by price volatility across U.S. exchanges. And that's pretty much all it says. So it doesn't really give you like a set amount. Now I've looked at a lot of different articles, and from what I can tell, it looks like it's around 1.75% for a service fee, and the volatility fee could be whatever it is, depending on the exchange. So I don't know per se right now because I just signed up for Cash App, so I'm waiting for it to validate my account. So I'll let everybody know, and I'll show everybody how it all gets signed up. But what I wanted to do was to show everybody the different fees for different exchanges. So what I did was I created a Google spreadsheet, and the same thing when we go over the scam of the day, it's also a Google spreadsheet, and I'm just going to link it in the description for every one of my videos so people can see it. So what I'm going to do is put this in as far as like what the fees are, what the funding account fees and all that stuff is for each different exchange that I can find is actually a good one. I'm not going to put some crappy different exchange that nobody's heard of in Kazakhstan or wherever it is, or however you say it. Mostly reputable places, okay, like Gemini and Kraken. I have just signed up for those two, so I'm gonna put here the fees and what's going on, and then I'm gonna start to look at different warm wallets or phone wallets and see how much those fees are, because some are very low and competitive, and then just put them all together so you can just take a look. Because I got to tell you, when you look at the fee chart and Coinbase, it is a long article and it is very cumbersome to go through, and there's a lot of double talk and it gets confusing. I even send out an email to them to say, hey, can you make this a little bit more simple? But this is the information that we have. So moving forward, I will update this as I see fit. If you see a mistake or you see something that needs to be added, and I'm just going to preface this right now, I am not going to put every single exchange. So if you have some wacky exchange that's way out there, don't even tell me, because I will not put it there. You guys trust me to put, you trust me to put the best information I can, so only reputable exchanges as best as possible. All right, let's move on. Last up, Ethereum 2.0. The big upgrade is coming about. It's going to happen this year, hopefully. And we actually already did a video on it. It was pretty detailed, but I thought it was best to revisit this because people have been having questions. And Cointelegraph did a pretty good job of putting together a very simple explanation, which I will link in the description so you can check it out yourself, about what Ethereum 2.0 is, how to stake, what everything that's entailed, what you have to do with your Ethereum 1.0 now, and how it all works out. So let's go over it real quick. I just highlighted the most important information that you needed. So what is Ethereum 2.0 staking? So holding a certain amount of Ether to participate in the network and obtain a reward in return. That's staking, essentially, for not just Ethereum. This is for every kind of staking, really. So the implementation is due to start in the summer of 2020, which is now, and will most likely run for another year or two until all 3 phases are complete. And we're going to go over that in a little bit more detail later. 0, 1, and 2, those are the different phases. So what is proof of stake? So proof of stake provides those with a stake network tokens the right to earn rewards for validating blocks. So that sounds pretty nice. POW, or proof of work, assigns block confirmation rights to those that demonstrate the largest amount of computing power. So there's 2 different ways to do it. You have the what I would consider the old way, what Bitcoin and Ethereum do right now, proof of work, which has the largest amount of hash rate or computing power to uncover those blocks and validate. And now we're just going to have proof of stake, where however many you have, you stake those, and that is your. Then you can earn rewards for validating, and that secures the network, they say. All right, so moving down. So why do all this stuff? Well, they're saying that it's far more energy efficient than proof of work. I mean, that's true. If you can see how much electricity that Bitcoin uses, I think the whole Bitcoin network is comparable to like the 32nd largest country in the world as far as electricity use. I did a video on it. I forgot about it, but it's a ton of electricity use. Now, do they use electricity like coal-powered electricity, or is it like some other type of form? Usually what we're seeing now, especially in China, is a lot of hydroelectric power. And then they're just going to build that new gigawatt factory over by me, West Texas. And it's going to be a lot of wind and solar. So, I mean, it uses a lot of electricity, but it's supposed to be renewable, quote unquote. Anyhow, Ethereum's core developers are heavily in favor of decentralization. I think we all are, right? Which points to another reason for moving to POS. Over recent years, the mining of the largest cryptocurrencies, including Bitcoin and Ethereum, has become heavily dependent on a small number of large mining pools due to the race for developing faster and more sophisticated mining hardware. And yeah, that's true. So here's my question, because I can hear the miners right now screaming at the screen. Do you believe that this is centralization? So here's an article from, this was March 12th, 2020, and I took a look at the highest amount of mining pools, and most are located in China. I think most of us know that. Czech Republic 10, Iceland, Japan, Georgia, Russia following that. I think it's going to change, obviously, with the new gigawatt factories opening up in Texas. So we will see. Anyhow, the biggest mining pools, we've got Pool and F2 Pool, BTC.com, and Pool, and all the rest of them. And you can see it makes up a pretty big amount. Just Pool in itself is almost 20%, and that is in China. F2 Pool, which is another 20, almost 20%, is in China. BTC.com is in China, and Pool is in China, and on we go. So the question that we've had this ongoing discussion is that considered centralization of Bitcoin? Because those are the mining pools, and miners, from what they have told me, we do a lot of premieres. I think I'm going to make this a premiere so we can have this open discussion. Miners have told me, look, I don't have to stick with any mining pool. I can just go to wherever I want to. So in that regard, there is no centralization. However, I've talked to a couple other miners, and they said, look, I'm going to go with the group that has the cheapest rates. So if that is in China, I am in the business of making money. So if it's less overhead, which is electricity, for me to be in a mining pool in China, I will be in China. So that brings me to this. The question is, well, if it's the cheapest to go there and you want to make the most money, and right now maybe it's just not very profitable for you, where else are you going to go? So that's the question for everybody. Let me know in the comment section, or hopefully we can have this during the premiere. We'll see what happens. Anyhow, moving on. So it talks about how does staking work. Minimum threshold is 32 Ethereum required to participate in staking, and validators will need to be running a validator node. So there's 2 things you got to do. You got to have 32 Ethereum, and you got to run a validator node. This doesn't need to be, you don't have to have like a special machinery, and it can be done on a consumer grade computer or laptop. However, validators will be expected to be online consistently or face minor penalties. The rate of return for staking ETH is expected to be around 4 to 10%. And me personally, just between me and you, I believe that Ethereum is a $10,000 coin. So if that's 4 to 10% and I got 32, not a bad annual return. A lot better than what I'm going to get at the bank. I can tell you that right now. So last part, comparing ETH 2.0 to other POS platforms. Validating blocks in, like, we'll say the Tezos network is known as baking. Hopefully, Baking Benjamins will be on this premiere, so I can ask them the question. They are bakers for Tezos. Anyhow, it talks about anyone holding the Tezos token can delegate their tokens to a validator to bake on their behalf. Anyone can participate as a baker if they hold 8,000 or more XTZ or Tezo tokens, called a roll, and operate a validator node. Rate of return for staking Tezos is around 7%. And I believe, actually I'm pretty sure, you don't have to give those over to anybody. Those can stay in your own wallet, and you can move them around as you see fit. So you can stake and not hold them, and have them there for staking, but you don't have to hold them there for like 3 months, 6 months to a year, as opposed to Ethereum here. So that was the very basics of it. And again, we went over this in pretty good detail in this video. I'm going to link at the very end. But just to go a little bit in depth, I want to talk about, this was the FAQ section from Consensus, and they laid it out pretty well and pretty simply. And I'm just going to go over these 5 areas. Okay, so the Ethereum 2.0 roadmap real quick. So there's 3 phases. Phase 0 is what we just talked about, beacon chain, and we're going to have validators. Great. And that's going to happen hopefully soon, summer 2020. Phase 1, this is when they get shard chains. And what are sharding? I always laugh when I say that because I'm a big kid. But shard chains are a scalability mechanism in which the Ethereum blockchain is split into 64 different chains, which allows for parallel transaction, storing, processing of information, and will enable 64 times more throughput than Ethereum 1.0. But it's designed to be able to handle several hundred times more data than Ethereum 1.0. So I have to congratulate the Ethereum network for, vastly improving what is going on. If they can go from just, as it's compared to like a 1-lane dirt road to a super highway, that's amazing in a very short amount of time. So great job. Hopefully you guys can pull it off. Phase 2, that'll be launched in 2021 or 2022, and this is just more updates, enabling transfers and withdrawals, implementing cross-shard transfers and contract calls, building execution environments, and scalability on top of Ethereum 2.0. And this is what will happen. They're going to go, so proof of work will finally be turned off all the way in 2021 or 2022. So until that time, it's going to be, both, essentially, proof of work, proof of stake. Anyhow, going forward, what is Ethereum proof of stake? And this just goes a little bit deeper than the last article. So validators are people, remember 32, and you have to be a validator, who elect to continue the blockchain by depositing or staking 32 ETH in the deposit contract on a continuous basis. Validators are randomly selected from the pool of all validators to be given the opportunity to create the next block. Should a validator successfully validate a block, they'll receive the Ethereum reward. If a validator attempts to compromise the truthful continuation of the blockchain, being liars or being bad actors, their deposit will be slashed, meaning they will lose some or all of their 32 staked Ethereum. So play right or grab bench. Well, it's going to be one of those two. Next, can I buy Ethereum 2.0? There is no way to buy Ethereum 2.0 since there will be no new type of Ethereum token. Instead, users will deposit Ethereum in the Ethereum 2.0 deposit contract, and that's only if you want to be a validator. If you don't, and you just have Ethereum, you're like, I don't care about that. I'm just going to keep my Ethereum, wait till it goes to 10,000. That's fine. You don't do anything. You just hold it. That's it. And it says right now this is planned to be a one-way, non-reversible transaction for validation. There are 2 ways ETH holders can participate in rewards for staking on Ethereum. One is they can run their own validator by staking Ethereum in increments of 32. And the next way is to stake their rewards through a staking provider or join a staking pool. And we'll talk about that in just real quick, actually. Here's the risks. Like they talked about, the first way a validator might lose funds is by being offline and not performing its duties correctly. This incurs a relatively mild penalty, which is you just don't get the reward you would have actually gotten if you would have stayed online. The other way a validator can lose funds is to publish contradictory information, being a bad actor. In this case, they're going to lose everything, 1 to 32 of their Ethereum, which I think is awesome. Either play right or get out. The next one is, how do I get selected to be a validator? So validators will be called on to attest to blocks on the beacon chain once every 6 minutes, essentially, and randomly selected from the whole validator set to propose blocks periodically. If there are 100,000 validators in total, Your validator will be asked to propose a block about once every 2 weeks on average. It's completely automatic and handled by the validator software. So it's nothing you have to do. It just kind of sit in the background until it becomes your turn, essentially, and that's it. And the last two, how much ETH is needed? They're going to need 16,000 plus validators for the initial run. And that means that they need a minimum of 524,288 ETH staked. That's a lot. And so if you're thinking about it, hey, they need 16,000 validators, and that could be you. And lastly, what will happen to the ETH I own now? And I want to make sure that everybody is crystal clear on this. There is no need to do anything special with the ETH you currently own. I'm going to say that one more time. There is no need to do anything special with the Ethereum you currently own. Just sit on it. Nothing to do. It continues to be fully usable on the Ethereum 1.0 chain. At some point, the Ethereum 1.0 chain will become part of the Ethereum 2.0, and your ETH will continue to function just as it does now with no action required on your part. Done. For those who want to participate in staking, you can choose to become a validator on the Ethereum 2.0 beacon chain, and it then becomes a validator balance on the Ethereum 2 blah blah. This profit is not reversible. So again, you don't have to do anything, and that is pretty much it for today's video. Look, thanks for, I know it was a little bit, not too long. It was actually pretty short, I think, for me. But that, I just felt like we had to go over it. I'm going to actually put people back to this. I'm going to reference them to this video because there's a nice, easy way that Cointelegraph did it, and then a more detailed way with consensus. So thanks again for sticking with me through the rants and everything else. I want to give a shout out to all my supporters. If you don't know, there's a little join now button underneath every one of these videos. And you don't get anything special. I don't hold any kind of information back. It's more like a tip. I wish they would just call it tip, because it's not join. You're not really joining anything special. It's just you get the tip, and I really appreciate it. So level 1, just a couple bucks, and I want to say thanks to everybody who did that. Really appreciate it. That's awesome. And then level 2, it's a little bit more, but I give you a shout out. So I do my due diligence, which is shout out to All Rights Off, the original, the OG, the first one to do it. Myself, who else? Dave Plummer, the straight talking guy. Check out his YouTube channel. Interesting stuff. Grant Sharman, plus Bruce Wood. And then Baking Benjamins, they are bakers for the Tezos for staking. Noel Flippin Vegas, Martin Lewin, and new one, Michael Ralph. So, hey, thanks to everybody. I super appreciate it. If you got a couple minutes to stick around with me, I just want to go over Scam of the Day because we got some exciting news. So Scam of the Day. So why'd I do this? Well, I did this because I got sick of people getting screwed out of their money. And I used to see so many scams. Now, not as much, thankfully. But we had a pretty good track record. Then we had a little bump in the road. And these 5, 1, 2, 3, 4, 5, they just never went away. They just never went away. And we reported them for like 2 months. They just didn't go away. YouTube has a great algorithm. Just can't, for some reason, get rid of these scams even though they're reported. Don't know what's going on. So I had to make a decision, and I just said, look, these scams are never going to go away. I'm just going to leave them dead. And we moved on. And yesterday, we started with this one, which was, I think it was a Elon Musk type of Bitcoin craziness giveaway. And lo and behold, video has been removed for violating community guidelines. So thanks, everybody. This is a good day for me because we actually got something done. I like to accomplish things and get that done. So I'm looking for new scams. I think some of you have already sent them to me, so I'll add them into the list and we can report them. But I'm just excited that I finally got a scam wiped away, which it should have been. There's actually 2 people doing it right now, looking at all these things. So, all right, that's it for today's video. Thanks for sticking with me. If you like those videos, there's gonna be 2 more on your left and right. Don't know which one's gonna pop up, but just pick one of those and off you go. So thanks a lot. Really appreciate it. See you on the next one.